How is everyone doing? Go back here. Okay. Beat the Banks. March 7th. You'll have to bear with me. I don't know if you can tell by my voice. I am a bit under the weather. As expected, when you come back from somewhere like East Denver. But it is what it is, unfortunately. I did really well to kind of stay healthy. Now, I will tell you, obviously, no, this is financial advice. No, this is health advice. No, this is tax advice. Definitely do your own research. I think I'm lagging. But for me, with regards to immunity, the best thing that was good for me was taking a lot of vitamin D3. And so my little stack is zinc, vitamin D3, quercetin, and a multivitamin. And that washing my hands frequently kept me out of the throes of illness when shaking hands with, and rubbing against shoulders with, thousands of people at a conference like that. So while it's awesome to be in a spot like East Denver, also kind of understand that there's a lot of germs, and you don't know how seriously people are going to take. Um, in particular, people are going to take uh, making sure that they don't get other people sick. So kind of keep that in mind. But regardless, we're back. If you're on our Total Value Locked community, and again, if you're not, please feel free to join us at school.com/beacon. I'm just going to put it here for anyone who is watching us on the live stream. Check us out, school.com/beacon. Absolutely free. Want to give a shout out quickly to our group members here in our Zoom chat. Welcome to Custodio and also to Rosalina, especially for being with us live today. Hopefully you're doing well. Do want to give some well wishes out to our friends out on the Gold Coast of Australia. Right now they're in the thick of it with a cyclone. Apparently, we call them hurricanes up on this side of the hemisphere. Something that doesn't happen in more than 50 years, apparently, for a hurricane cyclone to make it all the way to Australia. So our thoughts are with them. I'm going to take, man, I'm really lagging here. Not loving that. Going to take the time. I don't know if it's my video. I don't know if it's just the internet. Could be both. But again, school.com/beacon if you are looking for a great group to be a part of. Come check us out. We've got a lot of great information. Just start with the Start Here post. Easily the easiest thing to start with. That'll give you, if you just click on See More, that'll give you everything you need to know on how to get started in this space. Now, if you have some knowledge, you want to be an intermediate investor, or if you want to get there faster, we have paid offerings such as our Beacon Accelerator, and of course, to be the best, to go with our Beacon Mastermind. I really do think it's my video. Bear with me, guys. I'm testing out a new video setup, so it's not quite as good as I would like for it to be today. And you guys are kind of the guinea pigs, I suppose, on that. So hopefully my face looks a little cleaner. But regardless, the point I'm getting to is this introduction to DeFi course. This is something we put together in our free group. Has everything you need to really just kind of get started, and that'll kind of jump to the first part of what we're talking about today. Is that if you have been following us and you got to specifically the ability, I need to share my screen. I'm so sorry. I'm so sorry for our local Zoom users. You're not seeing the same thing that everyone else is seeing. There you go. Now everything's just all laggy. Great. just getting started. That's really what you need to figure out, and then obviously, be a part of our community. One second, guys. Pardon me as I mute myself across all platforms, and I had to cough quite a bit. Um, this is everything you need to know to get started using the system we've put together. Definitely go through and get through all of this. That's what you'll need to at least understand the fundamentals of what we're talking about today. What we're going to talk about today is the question of if I had $100, especially if you're call it 150 bucks. Well, $100 is a better way to go about it because one thing I want to and something I tell a lot of people who I meet in person is, the first question they ask is, well, how much do I need to get started? I mean, you really can get started with just about anything. Um, you're going to need a CEX account, that's for sure, right? So Coinbase is the one we recommend. That's at coinbase.com. You'll just need to set up an account. And then once you do your KYC stuff, which is you're going to need to put in your information. Once you sign in, then you can buy some crypto and then withdraw that specifically to we start everybody off at Arbitrum using Rabi Wallet. So ETH and USDC. Again, check out Introduction to DeFi, get you from there. Now, once you do that, there's really two things that you need to really consider is, if you really only have $100, should you really get into yield farming? Yeah, absolutely. You can certainly do that. Anything helps right now, right? Especially in a market like what we're looking at right now. So let's kind of talk about that for a quick second. As you can see, if we look at the market, we are quite a bit down, even quite a bit down from where we were a couple weeks ago, rather a couple months ago, right before the election. We're fairly flat if you take a look at it from that perspective, right? From when the election was decided back on November 20th. Yeah, around here. I mean, well, obviously we're up, but for the most part, we've kind of retraced to where we're back. If you look at the 4-year chart with regards to how Bitcoin looks, honestly, we're not any different than where we are every time there's a bit of a happening, right? So, we obviously got up to where we were. Let's see, if we right about here, and I think we're following a lot of that trend. Now, people asking, is the cycle over? No, absolutely not. There's still so much that needs to happen before we can even say we're even at the cycle top. We're not even there yet. We're still in a situation where there's a lot of outstanding factors that are kind of taking us back and forth, right? Meme coins have been a huge driver of that. Altcoins have been a huge driver of that. If we look at the daily today, there we go. So you can see Athena's up 16%. Look at that. Wonder why. We're fairly green on the half and half on the day. For the week, we have multiple things that have kind of come around. As you can see, some of these big ones, not really sure why PulseX is where PulseX is. But regardless, the big ones are going to be Move, ADA, XRP. Now, the reason why they're up is because of the announcement from President Trump. We're going to have a strategic crypto reserve. Now, today, if you all are not familiar, there is a crypto summit. And I'm at Google News, so if you're looking for just some aggregation, that's at 6:30 p.m. Eastern. So roughly in about 3 hours, we're going to hear more about, what are the plans for the Trump administration this term, specifically with regard to digital assets. It is no secret that the administration owns crypto. They're actually very involved in DeFi. It's said that Vice President JD Vance owns 70 million in AVAX, for example. I don't know if that's completely true, but he does own AVAX. There are multiple members of Congress. There are multiple members of the administration, all that own crypto. Now, David Sachs, who is the host of the All In podcast, former hedgie, and President Trump's crypto and AI czar, he mentioned that he sold the majority of his bags before he came into the position, which is interesting. Again, we don't know if that's completely true, but regardless, the president has his hands deep in the crypto well, mainly because of his protocol, which is called World Liberty Financial. He's done NFTs. He has the Trump meme coin. First Lady Melania Trump has her Melania meme coin. The Trump brands are far-reaching. In fact, they just bought 10 million in Bitcoin and ETH yesterday. Overall, it really hasn't moved the needle on the price. I think there's a lot of reasons you can really talk about why the price is where it's at. I think a lot of it has to do with the global economic view. Personally, for me, I think the fact that Japan voted to raise their yen carry, their yen rate, up to 25 basis points is a pretty big catalyst overall, because there are a lot of people who use the Japan, carry and trade to borrow a ton of money because it was very cheap to do so. So the fact that they raised rates 25 bips, I think has a larger looming butterfly effect than most people realize. The tariffs have a lot to do with it as well. There's a lot of worry about stability, that type of thing. When you have economic instability, some volatility, you're going to see some rates fly around. Now, do we fly back down under 80, down to like 60? I don't think so. That's just me personally. I think we're really just going to see a lot of volatility. He did sign the executive order last night with regard to a Bitcoin strategic reserve. Now, the other reason why there is selling is because they also mentioned, according to the news, that the strategic reserve is not going to be funded by anything they've purchased. It's going to be funded by quote unquote seized assets. And I don't think I see it here. I don't want to see Bloomberg's because we're not going to see past it. Oh, Barron's is going to be the same way. Yeah. I mean, I guess we could put will I get in trouble if I do that? Nope. 12foot.io. Oh yeah. That don't work with that. Anyway. Yeah, a lot of the issue is that the funds from that are coming, they're coming from the seized Bitcoin from Mt. Gox, which is good because that means they're not selling it. I guess that's the better thing. But a lot of people were thinking that there was going to be more Bitcoins bought and bought specifically from it. Now, with that said, a lot of people called the summit a buy rumor sell the news event. The date that I'm looking at, guys, is March 11th, with Senator Cynthia Lummis. Now, she is the biggest proponent of the strategic Bitcoin reserve bill, and she is, well, that is in a different language. Yes, it's going to be on the 11th, which I get. Is it Wednesday? There. March 11th. This is where we're going to see pen put to paper. This is where we're going to start seeing talks about a strategic Bitcoin reserve. It'll be next week. Today is like a gathering of, quite a few glad handers, right? Major crypto token issuers. Nothing necessarily from DeFi. Most of the people going are like Vitalik Buterin, people from Robinhood, Coinbase, major CEXs, Paulo Arduino from USDT, which is Tether, Jeremy Allaire from Circle, which is mostly owned by Coinbase. They'll all be there, but with regards to like actual protocols, you probably won't see them there, to be quite honest. But this March 11th meeting next week will be very important, I think. This is where we're going to see a lot of the legwork. If there's going to be more to the strategic reserve, not just the Bitcoin reserve, but also the crypto asset reserve, which is where, we saw ADA literally 3x Monday morning. I remember where I was about to fly out from the airport when President Trump tweeted about, XRP, ADA, and Sol, and then had to be reminded an hour later to talk about Bitcoin and ETH. Does it change anything with something like this? Honestly, I don't know. I don't think so. Because this is something that, is it just going to, the question you have to ask yourself, why is my mouse jumping around? In the event that there is a crypto asset reserve, are we going to see a lot of people jump into buying more crypto? I can't honestly say that the answer is yes. Not yet, at least. I think we're still quite a ways away from all that happening. Now, we do have multiple ETFs being applied for both Sol, for ADA, for XRP. Those won't be approved till a little bit later in the year. They've just been acknowledged at this point. So I think it's still going to be a little bit of a bumpy road, something like this for at least the next couple of months. So does that strike a lot of confidence if you're looking to get into crypto? I mean, if you're like us and you're in DeFi, you like something like this. We don't want straight up moves like this. This is the stuff that's hard in DeFi, because then you have to kind of go back into volatility pools and check that. One thing we talked about in this group is we want this very slow up into the right move. And even if it takes 2 years, that is great, honestly, because that means we can adjust liquidity pools and liquidity strategies accordingly and not have to deal with giant up and down parabolic moves, because that's where you can get wrecked. Same thing with leverage, right? If you're taking leverage, you absolutely don't want very quick up and down moves, because that's how you get liquidated. That's how you capitulate in a market like that. So, for those of you who took leverage, either longing or shorting off of this news, I hope you got the right alpha, and I hope you got the right result, because there's really only one huge winner. I guess there was someone who put in a 50x short right before the news came out about that strategic Bitcoin reserve, as well as the ETH portion. And they made quite a bit of money off of that, because I want to say I heard they put $20 million down on that short. So somebody had some info. Stuff like that. So yes, there's still manipulation in this market. It sucks. But at the same time, if you're in DeFi, you don't really, volatility is great. It's what you're looking for. Volume is what you want, because at least in DeFi, you're playing against the behavior of other investors. So while people are kind of crying, holding bags, we're actually taking our bags and making them work for us and earning fees while we hold. Something you can't say if you're in a trading situation, right? There are a lot of people who are in trading groups, and they're just like trying to figure out what's the next best move with regards to, what fibs they're pulling, or what pattern they're seeing, what types of, what are the candles forecasting. In DeFi, we can just kind of forecast all of that and make liquidity strategies that still earn fees off of that. That's why DeFi is just so great. Now we're going to see a huge propulsion in DeFi, in my opinion, moving forward. So, what can we do on stuff like that? Well, it really depends on what assets you're looking to farm, quite honestly. I'll go over one specific strategy that, frankly, is probably the strategy most people should take. It depends on what ecosystem you're on. If you're looking at just straight Solana stuff, that strategy is going to be at Camino. And I had a Camino window here somewhere. So again, to go back to the question I posed about 20 minutes ago, and I've just been kind of talking around and rambling. If I had $100 to start with, where would I start? I would take that $100 and I would do two things. I would split it into, pretty much like what we talk about in our group, which is a barbell, which is 50% high conviction, 50%. You can't see my hands here. Let me go back to this one. On Zoom, you can, but I guess you on Zoom, but 50-50, 50% high conviction, 50% higher risk. That's exactly what we're looking at. And that's something that we tell to a lot of our members, especially in this market. And when I talk about high conviction, that's about buying specific assets that you have high conviction in. Now, what does that mean with regards to a high conviction asset? Essentially, what a high conviction asset means is what is an asset that would be, oh, the 50x long, my fault. Thanks, Robert. An asset that you would hold for at least 1 to 3 years, right? So if I'm looking at, for example, it's very easy to come back and just check out, what are the major long holds for most people? Everyone's gonna say BTC and Ethereum. That's easy, right? Now XRP is one that a lot of people are really bullish on, right? Because they've been given the gift of a Trump presidency, plus a lot more movement and volume on their end. And I just realized that I'm not sharing my screen for the people on the live stream. So let me change that. There we go. But the intriguing part about XRP is that they're going to have DeFi very soon. Now they have their Apex conference in June. I'm hoping to go to that to learn a little bit more. But I do think by June they'll be in full swing with regards to their DeFi layers. Now, what I mean by DeFi is that you have the ability to, really have true DeFi picks and shovels. So like lending, liquidity staking, maybe even liquid restaking in some cases, the ability to earn yield easily. Right now on XRP, on the XRPL, the XRP ledger, all you can really do is just buy and sell shitcoins and NFTs. That's it. And that's fine for a lot of people. There's a lot of people who want to speculate on that type of stuff. But the true financial picks and shovels that we use DeFi for now, earning yield, having really novel ideas for generating revenue through different protocols, through different strategies, liquidity strategies, DCA strategies. None of that really exists yet on XRP. It will, because they've been working on the smart contract language for quite some time now. It's a couple years in the making, actually, based on what I know based on my meetings with the people at Ripple. BNB, of course, is definitely on the rise. I mean, it wasn't that long ago we were looking at 205 for BNB straight in the face. And that's a magic number of some sort when it comes to BNB, because there has historically been a gigantic blockade of whales who would be liquidated between 200 and 205 at the price of BNB. That probably is all gone now, so who knows what that number is now. But there was a real chance that BNB could have really had some serious problems if the price ever went below $200. Sol, as you all know, was at 260 not that long ago, right after the election, now down to 146. Is this the actual floor for Solana? Hard to say, but it looks seemingly so. $300 Sol, I think, is definitely still on the table for this year. 500 for the cycle, maybe higher. There's just too much good tech coming out from Solana, and the value of Sol rises as people use the chain. So we're going to see more of that moving forward. I don't know where it goes from here, to be quite honest, but it's all about your high conviction, doing your research, finding out what coins mean to you. A high conviction asset's one you would buy and then just take a nap for a couple of years, come back to it in 5-10 years even. These are assets you would still hold. If you cannot seemingly trust your answer to that question, then it's not a high conviction asset. On the higher risk side, these are assets that you're going to look into specifically for farming, altcoins, meme coins, narrative coins. And when I say narrative coins, we're talking about certain narratives that are big right now in DeFi, specifically with like DePIN, which is decentralized physical infrastructure networks, DeFi, DEFAI, which is decentralized finance with AI agents, uh, DeSci, which is decentralized science, where we're seeing a lot of interesting alt and meme coins created specifically for the purpose of raising funds for scientific endeavors. We still have zero knowledge, ZK. That's still a narrative going on in this cycle. And then interoperability is probably the next big one, as we're seeing more layer twos, more alt layer ones like Barachain, Phantom Sonic kind of come on the scene. Story Protocol, Story Blockchain, another one, another layer one. They're fighting against the layer twos that are more of the scalable ones from core Ethereum. There's even layer twos on Solana with like Sonic, for example. There were not Phantom Sonic, but Sonic for Solana, which is a layer two. Eclipse is another one. We're seeing a lot of different interoperability issues because as more regular random, or what we call normie users, are coming in, civilians is another word we use for them, how are we going to onboard them? What's the easiest way to do so? So I do think we're still going to have a wallet meta. That was one thing I saw at ETH Denver. I went to WalletCon, which is a lot of talks about specific wallets. Met with a bunch of different wallet manufacturers, and we talked about the wallet meta quite a bit to see, now that we're getting more regular people in the space. And I met a lot of regular investors at ETH Denver that didn't know anything about DeFi, just knew a little bit about crypto and a little bit about DeFi. They're curious more about how they can make their crypto work for them, is what's the next step. So it's going to take a little bit of time on your end with research in terms of what you're looking for, what you think would be good for your bag. Of course, if you join our Total Value Lock group, you can see absolutely everything that we talk about on a weekly basis. And for us, it's all about where's all the big money. And what I mean money is where's the majority of the Total Value Locked, or TVL, that a lot of places have that, because as where all the TVL is where you're going to find a lot of the investors. Where all the investors are, that's where you're going to find all the volume, and that equals yield. That equals yield for you as a user. Yes, it's cool to be able to find the next 100x, but is that sustainable? No. You want to. We're here in DeFi to create really great passive income flows. And when it comes to, specifically what is that protocol, and I answered this question on a crypto question, on a Twitter question yesterday. As you all know, that comes first and foremost with our, and that just went away, with our friends at Beefy. And Beefy is an easy answer. Why? Because it's something you can easily just get to quickly, find a pool that works, and you can use different bridges. One bridge that we use quite a bit is Jumper.exchange, easily to bridge, funds from one blockchain to another very easily. And that is one that we recommend. I actually met the team behind Jumper, which is Lie.fi, at ETH Denver. They were thrilled to know that, Jumper is a bridge that we recommend to most people because they aggregate a lot of these routes, and a lot of times they aggregate the best route to you, and that's the best way to do it, in my opinion. Now, but Beefy is an easy way to go. So if I would take $50, I would go and buy some of the assets that I had the most conviction in. I'd probably, in this case, I'd probably spend $20 on Bitcoin, $20 on Ethereum, and then probably something that I have a lot of faith in. And for me, that's Solana. That's another high conviction asset I have. So again, not financial advice, doing research, but for me, I'd buy 20 Bitcoin, 20 Ethereum, and then the other 50 would be 10 in Sol. The rest of it, I would go into a yield farm because I want to take some of my allocation and have it working for me. And that's easy to do at somewhere like Beefy. Now, there are multiple different places that you can go to, but if I just wanted to keep it simple, I just want to keep it on Arbitrum, which is Arbitrum and Base. Those are the two easiest blockchains to get to from Coinbase. In fact, for Base, it's pretty much free for that. That's an easy place to go. And then I would just choose by APY, what are the best farms that are out here? Now, CBBTC USDC is an interesting choice here. This is what's called a concentrated liquidity pool, but it's a managed one. So all you have to do is take the other $50, or if you want to split that up into two pools, you could certainly do that, and use that and come in with that money. So if I'm on Coinbase and I buy $20 in BTC, $20 in ETH, and $20 and $10 in Sol, I have $50 left. I would buy USDC with that and ETH, because you're going to need ETH for gas at some point. So I would buy $5 in ETH, 45 in USDC. I would take that 45 in USDC and the ETH. I would withdraw it directly to Base. It is free to do so from Coinbase. And then from there, I would take using our guides, of course, get Brave Browser, get Rabby Wallet, get that all set up, withdraw your funds with the ETH and the USDC down to your Rabby Wallet, come over to Beefy, get started here. You can just literally just choose the USDC option here. So if I just say USDC, I don't have any currently, but I would have $45 here, and then I would just put it into a well working pool. In this case, CBBTC USDC, probably a great pool to start with. Earning 1,600%. It's way better than anything you can get at your bank, right? And now the rate's high because of volatility with BTC, and we do like volatility. As you can see, this is a managed position, meaning that it's going to move with whatever the price of BTC is against USDC, because CBBTC is a derivative asset. And what we mean by that, it's a digital asset whose value is pegged to another asset. In this case, it's pegged to the price of Bitcoin. This is just the CB stands for Coinbase. This is Coinbase's derivative version of BTC. Now, there are multiple types of BTC assets in DeFi. The largest is going to be WBTC from BitGlobal and BitGo. But CBBTC is catching up quickly with regards to market share. There's also TBBTC from Threshold, another great group we've met multiple times at Denver, and some others that are out there, such as some of the derivatives that are used for staking in like the Babylon ecosystem. So things like Solve, Corn, Pump, all those BTC derivative assets, those are all available as well. But in terms of just regular farming, the biggest ones are going to be WBTC, TBBTC, and then CBBTC. And CBBTC coming from Coinbase, that'll be a very large one. Anyway, you just deposit your USDC, and in 2 minutes, you have a yield farm that will yield most likely. If nothing else changed for the rest of the year, 1,600%. Now, of course, that will change. Your P&L will go up and down based on the price of BTC, because that's what it's pegged to in terms of the price. So your P&L may shrink in the event that BTC goes down, but if BTC goes up, your P&L will as well, and you'll earn yield along the way, which is great. And that would pretty much be the easy way to do it. Are there additional things you can do in addition to that? Sure. One thing that we've done on a training here, and you can go check it out in our Total Value Locked section under our classroom. What we have, again, we do these trainings. These are free trainings we do every Friday at 3 p.m. Eastern. We've been doing this training in particular since January of 2022, guys. It's been a while that I've been doing these trainings. You can check out the recordings here, but in particular, there's a specific training that I want you to look at. It is training number 7. And it's how to farm like the whales. And I'm very sick in this one. You'll hear from my voice in that one, so I apologize for that. But one thing you can do is, if you wanted to do something with your ETH that you're holding or your BTC on Coinbase, you can actually withdraw that to your wallet, and then you can actually stake that at what we call a lending AMM and borrow against it. And that's what the whales do. They park their big assets, they borrow against it, they borrow stable coins, and then they farm them. 1 second. I'm happy that I can actually find the time to mute if I have to cough. Okay. But yeah, I mean that's an advanced strategy. Again, if you want to check them out, they're here in our Beat the Bank stream coins. We have our oldest trainings, and then our newest trainings will all end up here. So from July of 2024 to present, but these are from when we relaunched TVL. Rather, we relaunched Beat the Banks um, back in Black Friday of 2023. But Beat the Banks itself as an entity has been around since January 2022 when we purchased the platform and relaunched it under Beacon back in June of 2023. So yeah, definitely check that out. Again, completely free to get to. If you want to have access to these trainings that we've been doing for years now, please do so. Again, if you're not a part of our group, please join. It's absolutely free. School.com/beacon. Learn from the best in the business on how to get started on these types of strategies. So if everybody asking, how can I even do that? Let me show it to you real quick. The easiest example is at Aave. Aave is a long-standing DeFi institution, one of the longest. When I first got in the space, um, it was my first ever transaction. So when I first learned about DeFi, I came down. I did nothing for 45 days because I wanted to do the research. I wanted to make sure everything was right. I didn't have a group like ours to learn from. I had watched a couple of YouTube videos and was kind of hoping that I was doing the right thing. But you kind of can't do that now, right? I mean, you can, but there's so many. I mean, of course, I'm not the only educator out there. There are other educators, but there are people who have been in this space as long as I have that can at least impart some good knowledge for you. And we have everything put together in one really nicely wrapped gift for you on how we've been able to do it. But Aave is what we call a lending AMM. It's kind of like a savings and loan facility. Well, I don't even know why it's taking so long right now. Connect. There we go. Weird. Anyway, go to base. No, they really don't have a whole lot of collateral. Let's go back to let's go back to Arbitrum. At least on the Arbitrum side, um, you can borrow. My goodness. You can also do it on the base side, but Arbitrum just seems to have a more robust market. So what a lot of people do, like in the case of like BTC or ETH, is that they'll have some ETH, they'll park it here. They're going to earn 1.45% plus an additional 0.5% in some sort of there's some sort of extra incentive here. So you're earning technically almost up to 2%, which is still way better than your bank. And what you can do, because this is an auto compounding position, you'll just increase your position automatically. Is you can take up to, I'm assuming is still 80% loan with a stable coin. Now, the loan on it is actually not bad right now. At least on Arbitrum, it's 6.98, so 7%. And what you can do with those stable coins is then farm them at a place like Beefy, like we just looked at, right? So if I'm just going like CBBTC USDC 1697, huge. But that's on the base blockchain. Right now we're at Arbitrum. So let's just stay on Arbitrum. And let's say that I just wanted, I mean, I can get into any of these pools, but specifically, okay, let's just stick with USDC, right? So ETH USDC, Sushi, Concentrate Liquidity Vault, 763. That's 763% APY. Beefy has a very good share of that. That's great, 36%. So this would be one I'd be willing to get to. You would take the BTC, the USDC that you borrow against your ETH, and then you would just farm it here. Now, as you saw, Aave is you have to pay 6% on your 6.98% on your loan. You'd have to it would just add on to your balance, so you'd have to pay that down. But yes, based on that account, you are very much outperforming with 765, that's 7%. So you're profiting quite a bit off of something like this. So you could take the profits every week because these rewards, they stream every block, and every block is like seconds. So you are quickly earning money right away on anything you put in here, and you can pay down your loan over time. The great thing about loans in DeFi overall is that there is no expiration date, right? Detail wise, I can borrow this. I mean, you could have it for 30 years if you want. DeFi hasn't been around that long, just so you know. But unlike a regular loan, there's no expiration, there's no term, right? You just pay it back when you can pay it back. And that's kind of a shocking thing for most people when they first get in here. The first thing is that they're in control of their own destiny because you're self-custodying your assets, right? It's always a journey of self-custody when it comes to DeFi. The fact that you can go and take out a loan against your own money, you don't have to worry about credit score, you don't have to worry about having a minimum amount of collateral. I mean, well, you have to have collateral obviously to put down, but you don't have to worry about like a minimum amount of savings you have to have in the bank, that type of thing. They don't ask about that. The point is that you're paying off of a loan, you're using your collateral, taking a loan against it with another asset, and then using that asset now to go farm in another pool. I can tell you right now, back in the day, it may not have been as profitable because the majority of these pools weren't paying 765% per year. A lot of them didn't even pay 50, 76% 3 or 4 years ago. I mean, the fact that we have these now in concentrated liquidity, I mean, this is unbelievable rates for you guys. You guys are all coming in at the right time. And there are multiple pools you can get in here. And that's ETH and USDC. So obviously that's a bit of a different call because that's a directional asset. Let's say you want something a little bit more palpable, I guess, a little bit more stable. So that's where I can just click on stable coins. And now even here, USD plus USDT 211. Obviously, it's fairly low TVL. I don't know if I'd go with that, but if I just wanted the concentrated liquidity pools because they're just they're high efficiency, the rates aren't fantastic, right? 8%. So maybe not the best route to go for stable coins. But if I'm going to take risk, this is how much I'd want to get paid. A lot of people ask, what's the right rate? For me personally, if I'm going to take the risk on a directional asset, even one as well known as ETH, I want to be paid for it with a good rate. Generally, for me, even for like altcoins and stuff, I'm looking for at least 150%. So 765 is fantastic. I get to cover my loan plus get some profitability, even some profits that I can save for paying taxes, for example. Not tax advice, of course. A lot of people are going to ask, how do I take profit from something like this? If I go and put, my $50 in here, my $45, what you would do is that, whenever you're ready to harvest or at least take some profit, just go to withdraw. And then from there, you would just select what asset you'd want to back in. In that case, since we're borrowing USDC, it would be in USDC. And then you would just choose an amount, maybe up to like 2% at a time or something like that. Figure out what that number would be. And then withdraw that. Then that goes back to your wallet, and then you can pay down your loan. There's a variety of things you could do. It's up to you how you want to handle that. Again, this is a journey about self-custody, so this is your journey. You're now getting started in the ability to find multiple positions like this, which is essentially the whole thing we call yield farming, to be able to find positions that get you great profitability. Now, this is just for Arbitrum. If I were to open up all the blockchains, now if I just go for concentrated liquidity and APYs, you can see we're seeing a lot of different farms with very high rates. 6,100% on AVAX USTC, for example, on AVAX, which is an easy chain to get to from Coinbase as well. Very quick and very inexpensive to withdraw USDC, and then just you need some AVAX for gas because that's the gas token for AVAX. But overall, a lot of great options. We weren't seeing rates like this a couple years ago, quite honestly. But that's where concentrated liquidity has really become a really important way to farm yield in this space. So that's really the one thing that we can be very thankful for, is just the ability to have concentrated liquidity and profit off of other traders. So while you're going to see traders sitting on CEXs, not being able to custody their assets, so if something happens and the market goes in a bad direction, you might actually have to pay, especially if you're doing margin, or any type of thing where you have to cover your losses, and not everybody has that. But wouldn't you rather just be in a platform where people can trade and you're able to also earn fees? And that's where the power of DeFi comes in. Uh, Obviously, there are a lot of people in our groups and our communities that still do trading. Trading's great, but in my opinion, DeFi is better because you can trade as well as earn fees while you do so, which is something you can't say about trading. That's the long and the short of it. I'll take any questions. If anybody has a comment or a question that they have, feel free to pop it in the chat. Happy to take those. Otherwise, we'll head to the recap, as I do need to get to some other things. Overall, again, this is our first Beat the Banks back after ETH Denver. For those of you who are not familiar with ETH Denver, ETH Denver is the largest hackathon, quote unquote, DeFi conference in the world. Happens every year, the last week of February, in what's called the main event. They also have what's called Biddle Week. Biddle is a play on build. And it's where, if you want to learn how to become a developer in DeFi, which many people are excited to do, they have free education on how to do so. You'll learn from some of the best programmers in the world about how to learn how to do that. And that is really exciting, to be quite honest, with regards to how to do it. So I know multiple people who've gone through Biddle Week. There's also a hackathon that goes around along with that, and there are people I know whose job or their career is going to different hackathons across the world and trying to earn money. In fact, half the time, and I met several students from the University of Texas at Austin UT, from their blockchain club, who were at Denver trying to earn a bounty, because I think there is roughly almost 1.5 million in bounties that were being given out. So if you're a student with some knowledge and have an interesting idea, great place to do so, because you can earn some extra money to go back to school with, whether you're paying down loans or if you're just starving student and you need more money for late night pizza and stuff like that. Blockchain in our university systems is thriving in terms of programmers and in terms of things to do. So that's really cool. Ditch that boss career coaching. Not sure what you mean by what's the site. Although I do I'm sure that we're at ethdenver.com basically is the site for where we were last week. And there might be some lag with the stream now that I think about it. That's just kind of the one thing when you stream, people may be watching quite a bit after that. Anyway, that's where we were last week. For myself, being business development as well as a co-founder for Beacon, my job at ETH Denver was to try and create as many awesome relationships as possible between myself and a myriad of different DeFi protocols, which is something that we did quite a bit of. Went to a lot of side events. There's a lot of side events that happen during here. A lot of partying. I'm not really a big party person, but I do want to meet where a lot of the team members are feeling the most comfortable in their element, I guess. So that was really good. A lot of these side events had additional talks, meeting with people, meeting some contemporaries in my space that I've known for a long time. People like Patrick Collins from Dynamo DeFi, Steven from Steven the Calculator Guy, people that I've been following a long time. Before I cover the Denver event, for loans, it's at Aave, AAVE.com. The full power of DeFi. And for most people, this is the easiest example to understand, right? Because for a lot of people, they don't quite understand liquidity provision. They don't understand why, I'm depositing money here and earning 6,100% in this pool. That doesn't make sense to them. That's something you'll have to learn, obviously. Going back to our site at school.com/beacon, of course, you can go into our free material that's under our Beat the Banks trainings and learn more about concentrated liquidity. Now, but stuff at Aave, which is pretty much like a savings and loan facility, people can't understand that. They're like, oh, I can take my collateral, I can take my money in my wallet, I can post as collateral. And even if I don't borrow against it, I know I'm earning 1.45% on my ETH, which, may be a little not so great. But there are other blockchains where they may be offering you a better rate. Okay, 1.16 on Base. What about on OP? 1.88 on Optimism Mainnet, which is not bad. And they still have some other ones where you can earn a little bit more. And again, I know a lot of whales that just park their money there. Now, the majority of large whales will go on Ethereum Mainnet, which Core, sorry. And it's 1.87 there. But there are other protocols besides Aave that do this. If you've heard of the loans they now have on Coinbase, where you can take loans out against any USDC or ETH, they're using a protocol called Morpho for that. morpho.org. And at Morpho, you can find, APYs just depositing USDC in excess of 10%, which is fantastic. Like this is EUSD, which is from a great protocol that we're friends with called Reserve. And that's at 11.93%. Now, the rates are a little bit lower than they have been, mainly because of what we call the flight to safety. When you see charts like this, that might be a little bit too volatile for even some of our best members. So, or the majority of the market, to be quite honest. So, when prices are up and up, people are out buying altcoins. They're getting out of stable coins. When the market gets a little squirrely, frothy, choppy, as we call it, because there's a lot of chop here, they'll go back to stable coins. They're going to bundle up in stable coins. They're going to quote unquote sideline themselves with some powder so that as new opportunities approach, they can have easy access to funds to buy new coins or get into some new opportunities. So yes, we're going to see a compression of rates. We've already seen a compression of rates. Like if I go back to Beefy and I just clear and I just click on stable coins, sort by APY, the highest that I'm looking at that I would actually get into is, I guess there's some around 40, but generally I could scroll an entire screen and see things above 20%. They have actually compressed a bit now to, between 15 and 20%, which is still fantastic. The ability to have a stable coin pool that you're earning more than 10% on, and I can scroll all this way down. I mean, that's fantastic. And these are rates that you can easily access. It's not behind some AI-based hedge fund or something like that you're paying someone an exorbitant amount of commission for. These are things that you can find yourself, and that's really the biggest thing. Alrighty, guys. That is all we have time for. Again, school.com/beacon. If you're looking to join our community, again, completely free. Learn from the best in the business. Introduce yourself. Check out our Start Here post. You can learn more about what we do. Also, watch the news. Today, we're having our first ever White House Crypto Summit starting at 6:30 p.m. Eastern. It goes till 10:30. We will be watching the news very closely to see what happens here. Now, last night, President Trump did sign an executive order to create a strategic Bitcoin reserve, not at any other asset, just Bitcoin, just so you guys know. But what happens next week with Senator Cynthia Lummis, who the main author behind the Strategic Bitcoin Reserve Bill, that happens on March 11th. That'll be something that we're going to be watching out for specifically, because this is where most of that movement, most of that news, most of that legwork is going to take place on what's going to happen. So far, based on what's been mentioned, is that the majority of the funds going into this is coming from the from existing assets. No new assets are being bought and being placed into the reserve. With that said, there are multiple states led by Pennsylvania, led by Texas, and a couple others that do have a strategic Bitcoin reserve going through their state legislatures. So while the federal government may not be buying more currently to do that, we'll learn more next week, there are multiple states who will be purchasing Bitcoin. And remember, Bitcoin is a fixed supply asset. There's only ever going to be 21 million Bitcoin. So once we get into a situation where there's a high demand for Bitcoin, guess what? Supply shock sets in and suddenly the price of Bitcoin shoots back up, right? The point is, stop selling your Bitcoin, please. If you got it, put in an Aave or something like that. Borrow against it. Pardon me. All right, we do this show, of course, every Friday, 3 p.m. Eastern. If you're in our free group, of course, you have access to our weekly podcast on Wednesdays. That's our TVL show. Again, here you can just go to the calendar, and that's the Beacon TVL show simulcast on our Twitter. Hello to all of our Twitter folks, as well as here on our YouTube channel. So, and that will be the next one we go to, and that's our weekly show where we have panels from around all of Web3 and DeFi talking about the week's news, helping you interpret that news and seeing how it can be helpful for your allocation, and then learning about new projects. And we've got a lot of new friends to introduce you to over the next couple of weeks. I made many connections, guys, dozens of connections, people who want to be introduced to this group specifically because they know and love what Beacon is doing in the name of education with regards to DeFi. So if you have friends who are curious about DeFi, friends who are curious about on-chain investing, blockchain investing, please send them our way. Again, we are not a trading group. We talk about decentralized finance. We talk about on-chain and blockchain investing and using multiple strategies to help funds that you purchase, crypto assets, digital assets that you purchase, and help them work for you. It's not just trading. It's way more than that. So with that said, we'll see you next week. Take care. 07, as we say here. Beacons up. Let me back to my screen. As we say here in our group, beacons up, banks down. Take care, everyone. Have a great weekend.